Okay, we're recording this video on Wednesday, the 10th of August 2016, and I hope you're doing great. This video is going to be quite different. Not going to talk about the E-mini, not going to talk about the US stock market, going to talk about ETFs and stock market indices around the world. In fact, this video is going to be one of three I'm going to do over the next several weeks. This one's on ETFs and stock indices around the world. The second one is going to be trading stocks, swing trading stocks, and picking up kind of beaten down stocks and how to do that. And the third one is going to be about trading Bitcoin. So I'm going to put forward some ideas on how to kind of find some opportunities and check them out with the better indicators. So the first part of this video is going to be about ETFs and global stock indices and trying to find some value around the world. And then the second part of this video is going to be using the better indicators to kind of check the trade and get into a trade. You might have noticed me mentioning over the last several months Russia, and we've had a little bit of a setup happen over the last several days and got my first leg into a trade in the Russian ETF, and I want to explain how that all came about and what the process was for finding that. One of the reasons why I've been getting a little bit more interested in this kind of other stuff rather than E-minis over the last several months is, day trading's tough, particularly some of the ways I do it when I'm trading either like at midnight when I'm Sydney, Australia, or like 3:30 in the morning when I'm in Hawaii. It can be pretty hard on you, and like trading 5 days a week is I just don't think it's practical when you're kind of trading in those kind of odd time frames. So you have to pick your days during the week that you kind of want to trade, and sometimes daily volatility, particularly in the last 2-3 weeks, has just been micro, really hard work. So other ways to kind of be trading and kind of taking advantage of the markets. We've got the US markets on record highs kind of right now, kind of overbought, but seemingly with no end in sight. What about other opportunities around the world? So let's talk about ETFs. ETFs have taken off over the last 10-15 years. I think they're part of the future. What we used to be fascinated was by mutual funds and the days of Morningstar kind of ratings of all the mutual funds. These days I think the far more interesting kind of sector is ETFs for the average investor to be able to kind of get exposure in a whole bunch of different markets around the world in different sectors and so on. So there's fascinating stuff kind of going on ETFs. The biggest player in the market in ETFs is BlackRock and their iShares, and this is their website here. They have just coming up to $1 trillion invested in assets under management in ETFs. I don't know what the whole ETF space is worth. It's got to be getting on to $3 trillion because the number 2 player behind BlackRock is about 600 billion, and that's Vanguard, and then State Street is the next guy behind that with $500 billion, $500 billion, I beg your pardon. So just with those 3 top players, you got $2.1 trillion. So you add in all the others, there have got to be the 30-40 kind of ETF providers, issuers out there. You've got to be talking over $3 trillion of assets under management. So it's a pretty big space. The reason why I like this particular iShares website is because they've got a really handy dandy little filtering app on their site here. They've got all of their ETFs in one place. There are 342 of them, and they're across everything, sectors, equities, commodities, real estate, you name it, strategies by region, by market, and so on. And what I'm looking for is I'm looking for stock market indices around the world that have been beaten down, and I want to take advantage of kind of good value around the world. And this is how I do it. I just click on the equity box there, and that takes out a whole bunch of these funds. From 342 you're left with 240, and then I'm not particularly interested in the US indices. I want to look around the world, so I click on Europe, Asia Pacific, and global, and that knocks us down to 135 ETFs in that kind of universe of searching here. So next thing I do is look at the yields tab here for each of these ETFs, and I want to rank these in descending order. Now they've got 3 different yields here. yield for the last 30 days, SEC yield. This is a measure that all of the funds kind of give, where you can compare their 30-day yield, and that's an SEC kind of badged type measure. Not particularly interested in that. The distribution yield gives you the latest kind of yield that's kind of going on there. Not interested in that one. What I want to get is a sense of the 12-month, kind of the last trailing 12-month yield, and what that is percentage of the price, or the NAV, the net asset value of your ETF. So I click on that and make sure that it's in descending order. So we've knocked out everybody. They're all stock market indices around the world, not in the US, and we're looking at them in descending order of dividend yield. And so that gives you a measure of valuation. If the dividend yield is high, the price is low. And so I'm looking for beaten down share market indices around the world. What I don't want to pick up is some of these kind of broader ones. So you'll see kind of going down this list at the moment, you've got obviously kind of preferred stocks kind of yielding just under 6% here. We've got international, again, with dividend kind of yields going on there, high dividend yield stocks at about 5.3, 5.4% yield here. We've got a broad European financials here, obviously, with what's going on with the Deutsche Bank being beat down, with all the Italian shares, banking shares being beat down. The European financials, their yields are starting to kind of creep up. We've got emerging markets. That's too broad. I'm not looking for that. Asia Pacific. And then here's the first one that kind of pops up on this screen. This is United Kingdom, and the ticker is EWU. So I'm taking a look at that. EWU yielding about 4.5, 4.6% at the moment. The next one here is Malaysia, EWM. So I'm just writing these down, EWM. We're going to kind of have a look at these. Malaysia is kind of beat down at the moment because they've had a bit of a scandal. They've got this kind of, it's a sovereign wealth fund and political kind of shenanigans kind of going on there. So Malaysia's been taking a beating, and so their dividend yield is up at the moment, about 4.3. We've got some currency hedged Spain. I'm not particularly interested in the ones that are looking at currency hedged, because I want to take advantage of the currency. So I'm not looking for them to hedge the currency here. And the next one here is Spain. So this is the hedged currency, and this is the unhedged currency one. So EWP. And when it says capped, all that means is it's kind of cap weighted ETF. Nothing kind of special on that, but I want to avoid these kind of hedged ones. Here's United Kingdom, again currency hedged and so on, and then Sweden and so on. Now, not going to, interestingly, Australia is kind of down here at the moment, about 3.77. Australia, about a month and a half ago, was up further on the list. And in fact, when I was doing this whole screening process at the beginning of the year, around December time, the one that stood out at the moment, at that time, was way up here, and I think the yield, I should have taken a screenshot at the time, but I'm sure it was up at almost 7%, 7.5%, something like that, and that was Russia. And so that's why Russia has been on my radar screen for quite some while. So you can use this little screening app on the website, on BlackRock's website, to find stock market indices that are beat down because their yields are starting to kind of pop up and look fairly interesting, especially when you compare it to what cash and bonds are yielding at the moment. So let's look at those. That's going to be the UK, that's going to be Malaysia, and that is going to be Spain. And then I'll pull up Russia as well. Now, there's three components to the potential upside from buying a beat-down ETF like this. First of all, you've got the stock market index in that country that could be rising. Hopefully, if you kind of bought it low, it'll kind of start to trend up. So you got the index appreciating. This is the first thing. The second thing is you want to beat down currency, because you want the currency. These are all in USD, US dollars. You invest in US dollars, and what you want is, versus the US dollar, you want these emerging market or whatever kind of currencies to be going up versus the USD. And then the third thing is you're also trying to pick up a bit of a yield as well. The yield is going to be a small component of that kind of rise, but it's kind of out there as a distribution kind of yield. Now, the next step that I suggest you do is you check that the country that you've identified, the ETF that you've picked, is the largest one of that sector. And just as an example, I'm just going to show you Russia, because this is a really, again, another useful site to use, which is the ETF database, etfdb.com. And what I normally do there is just type in the country I'm interested in looking at, and it'll give me, for example, in this one, the top 6 Russian ETFs. Because, funnily enough, although the BlackRock iShares ETF, which is ERUS, is not the largest ETF covering the Russian stock market. Here it is, ERUS, the iShares one, and in terms of assets under management, it's about $321 million. But RSX, which is the Van Eyck Vectors ETF, has about 1.7. That's got to be in thousands of dollars. Yes, $1.7 billion versus $320 million. So that's a lot larger. You want to be tracking and charting the largest volume ETF. So that's why I switched from ERUS to RSX. Now with the other ones, I haven't kind of checked through. Malaysia, I'm pretty sure there aren't many ETFs that are covered in Malaysia. So let's just look at that. Top Malaysian ETFs as an example here. And this comes out with, yep, there we go. There's only the one. $315 million of assets under management. EWN is the largest one there. I'll check the other ones with Spain and the UK. Let's just look at that. Yep, with Spain, EWP is the largest one there. And with the UK, there we go, with the UK, EWU is the largest one in assets under management. So sometimes that extra step is worth doing in the ETFDB site, just to check that you're using and tracking the largest ETF in that sector. The next thing that I do is I like to go to Google Finance and just check the currency and just see what the currency is doing. So let's go to the Russian ruble and just check what that's doing. No, that's not what I wanted to do. I want to go to the Russian ruble here, and here we go. We can look at the Russian ruble over time. Now the reason why I'm using the Google Finance site to look at kind of the currencies here is TradeStation is pretty good with covering FX in all its symbols, but it's not complete. They don't have absolutely everything. I don't think they've got the Malaysian ringgit or the Russian ruble, so have to go elsewhere to kind of get that data. But here's a great example. So this is why the Russian ruble is kind of an interesting play, and the Russian index at the moment is a good play, because this thing has been beat down. So you can see 08, this is when the Russian ruble kind of maxed out here at about whatever that is, 40, and we're down at kind of 15 at the moment here versus the USD. So we're beat down on the currency, and at some point hoping for the currency to kind of turn around. So that's what's going on with the ruble. Have a look quickly at the Malaysian ringgit. And same kind of thing, Malaysian ringgit. You can see it was obviously kind of fixed back for 2005. It's kind of floating now, and it's been really beat down, 32 down to 22. British pound, we've been tracking on Emini-Watch for quite some while. We know the Brexit's kind of going on, and I don't think the downside move in the pound is over, so I'm not going to pull that one up. And the Spain is the euro, obviously. So we know kind of the picture on the euro at the moment. It's kind of starting to try and find a bottom, so I'm going to pull those up on the better indicators. So that is the process I go through. First of all, it's finding the beat down ETFs and the stock markets kind of around the world. The next one is just checking that we're using the largest ETF that covers that sector, using ETFDB. And then the third step is just looking at the currency, just to make sure that we understand what's going on with the currency, and that it's kind of oversold and due for a bounce. Now let's pull up the better indicators and kind of check these things out. This is the usual kind of screen that I use with the better indicators side by side. On the right hand side, I've got the system view using the multiple time frame better indicators, where we've got strength shown with red bars and weakness shown with white bars here. We've got the three time frames shown with support and resistance that are generated by a better sine wave, and I'm trying to trade in tune with the highest time frame, which is these very solid kind of bars here. And you can see that just lately on Apple, just as an example, we've had a pullback to end of trend go off on the highest time frame here, bottoming out at kind of $90 where we've had exhaustion sell bullish divergence. Price is now kind of confirmed, and we've broken into an uptrend here on Apple. So that's, down here at 91 was kind of good buying, and we're now up above $100, reaching 108. So that's the system view of the world. The other view is with better pro-am and better momentum here, and I like having better sine wave, the highest time frame kind of plotted below, because that kind of keeps me in tune with the highest time frame. So you can see this is the exhaustion sell that we had into January 2016, where we kind of panicked, and that level was tested with more blue professional bars kind of coming in here at the lows back in April, May. And now we've tested again on low volume, little bullish divergence here, and bang, we've taken off to the upside. That blue professional bar through resistance is jumping the creek. We're kind of getting this thing going. You can see the amateurs got in too early. They thought, ooh, this thing's taken off to the upside. I can buy Apple under $100 or just over $100, and they were wrong-footed up here at this extreme, and we came all the way back down to test again, and you can see that pattern in better momentum, kind of bullish divergence patterns, less and less selling going on. Finally put in our price pullback to end of trend on the highest time frame, and this thing took off. So that's just a little kind of recap of Apple, but that same picture is what I use for each of the ETFs. So let's look at RSX first of all, which is Russia. And I was remember I was looking at this back in December, and I was saying, ooh, this is interesting. I need to kind of keep an eye on this with a potential view to kind of getting into a long trade. If you look back, what's happened, this thing collapsed with exhaustion sell back at the beginning of 2015 down at $14, and it's taken all of that time to test into 14, 13, kind of down here, less and less selling going on, and that exhaustion buying there is people rushing in. And you can see that we've been holding around these highs for quite some time at $16, $17, $18 here. If you look at the system view of the world, that was our exhaustion sell bullish divergence, end of the downtrend, kind of down here. Then we made pullback to downtrend, pullback to end of trend on the highest time frame with that big dot there and these solid line here's. We kept on going. You can see all the weakness, all the white bars continually weak into that move, and then we broke into an uptrend. And we've been looking at this, so that was a low risk entry point, this signal here, broken into our uptrend, exhaustion by getting the move going. Now, what I was waiting for was maybe this was going to go to settle down with more downside moves from this highest time frame with better sine wave. Better sine wave on the highest time frame was saying, well, we got to play out this thing from resistance down to support. And during that whole time, all that we did was we just settled in at those highs. Every time we came back into 16, we got kind of picked up. So 16 was kind of holding and holding, and this was time running out. And finally what we've had now is this downside move in terms of time has run out, and we've continue to break above this highest time frame into what I'm hoping is a nice big trending move on the upside. So we kept on above this. All the red here shows the uptrend going on. Now, if you were a brave person back in at the beginning of the year buying in at $13 or $14, good for you. That would have been good. But what I was waiting for was maybe we're going to have continued weakness as this plays itself out. And, you would have been able to hold through this kind of jaggedy pattern over here, but why wait and tie up your capital in something that's not doing anything for effectively 6 months? What I'm waiting for is a nice kind of trending break where we kind of hopefully don't look back very much and kind of get going in one direction and have kind of minimal heat taken on the position. So that's why I've got into this, the first half of my position into RSX over the last couple of days, just at $18. So that's RSX and what I was looking at and why it was on my radar screen from the beginning of the year, because the dividend yield when it was down here at 12, 13 bucks was up in the 7.5 or something like that, and it was looking very interesting. Now I think it's going to take off to the upside, and there's kind of a couple of good reasons for it. The ruble's been beaten down, and the ruble's kind of due for a little bit of a pickup. We've also got oil that has been beat down, and huge proportion of the Russian index, the MI6, is in oil and gas, and so we've got oil and gas kind of testing into the lows, and we have kind of strength in oil and gas. That'll be another reason why the Russian index market will kind of take off. The other one is Russia has very little sovereign debt. And around the world, everybody's gone to negative yields and crazy amounts of sovereign debt, and Russia has very, very little of that. Not looked at the stats kind of recently, but I think it's down at like 10-20% of GDP. So it's not like any of the other kind of developed markets out there. It has very little government debt, and people are saying, well, it's got kind of hard assets like oil, and maybe it's time for the emerging markets to kind of take off to the upside a little bit as well. So there we go. That's the reason for getting into Russia and what the chart was looking like there. Now, let's have a look at the UK, so EWU, and let's see if it's kind of worth putting that on the radar screen. So, first of all, this kind of view of the world with better pro-am, the momentums and so on. Obviously, with the Brexit, you can see that the stock market, the UK stock market, kind of sold off here. And we've got an exhaustion sell kind of going on. And we've got pullback to end of trend that's being made. The pullback signal went off here, and we're kind of playing out pullback to end of trend. And, having had that exhaustion sell, we've bounced a little bit from there. But the system is still showing we've only just broken above resistance here. For a potential area of strength. We had strength during this move here, then we kind of broke down with the Brexit vote. We've had just a fraction of strength here with one little red bar over the last couple of days. But the other thing that's going on you've got to be wary of is the currency, and let me just bring up the British pound. So here we go, exactly the same view, just looking at the British pound in terms of the currency futures here. And you can see since October of last year, this thing has been a big downtrend. Yep, we've got exhaustion sells going on and we've got bullish divergence, but we have not put in pullback to end of trend on the intermediate time frames kind of lately. We've still got this kind of area of resistance kind of going on. We could easily have a little bit of a bounce in the pound, a little bit of strength kind of going on, but this, for my mind, hasn't spent enough time basing for us to really have a move in the pound to the upside. Whereas I think, the Russian ruble had spent more time kind of basing on the downside and started to move to the upside. Let me just pull that up again. So we look at the Russian ruble. Yeah, so let's look at that just the last year in terms of the Russian ruble. So there we go. There's the picture in the Russian ruble. This obviously, was the 08 kind of decline, and the Russian ruble sold off heavily, but it's kind of bounced back. Had a little bit of weakness kind of lately, and it's starting to maybe kind of hold that support there at 15, maybe start to rally from there. So it's a different picture in terms of the Russian ruble than the British pound. The British pound still looks like it's got some testing on the downside to kind of go. So we've got this weakness still showing on the better indicators. So not time to be thinking about kind of picking up the UK market, but it's on the radar screen. Just kind of keep it there for the next 6 months or so and see how this kind of develops. So the next one to check out is Malaysia. So let's just put that in EWM. See what that looks like now. This sometimes you'll get with ETFs that kind of are more thinly traded. This looks like a real kind of gap down here. This is the right Malaysian index that we're kind of looking at, but I don't like when the data kind of gaps down like that. Again, this could have been the bad news out of Malaysia, but you can see we're just putting in the pullback to end of trend that we've got to put in on Malaysia. There, this is got our exhaustion sell, bullish divergence, flush kind of going on here. So it's certainly beat down. It's kind of interesting, showing a little bit of strength kind of going on here, potentially kind of poking above 850 or going to 9 would show this thing's kind of maybe on the way, and it's time to look into Malaysia as a buying opportunity. So that's kind of interesting. I would probably though refresh my data, go to the another data source to kind of check that this data is correct and that gap is not is a real gap, and that's not just a data glitch that I got in TradeStation. So that's kind of interesting. So Malaysia in the next 3 months or so might be an opportunity there, but it's a pretty thinly traded ETF, so I don't know. Next one, Spain, EWP. and there we go. Same kind of picture. Spain broke down below this highest time frame support into a downtrend. We've had the exhaustion sell on a downside at the beginning of this year. We've come into testing down here at 24. Blue professional bar kind of picks it up. We have flush patterns and so on. We've still got pullback to end of trend to go, so a little bit more time to go here on EWP. In terms of the trending system, this is the downtrend, all these white bars into exhaustion sell bullish divergence, and there's the pullback that we're putting in on the highest time frame. First sign of kind of strength going on here that we've had for a very, very long time, since mid 2015. So a little bit of strength kind of showing there, but I'd still want that to kind of run out in terms of time here with this resistance to support on the highest time frame on better sine wave to have a cross of these kind of on the way down, but a little bit of strength showing in Spain at the moment. So Spain and Malaysia kind of looking kind of interesting. Too early days for me in terms of the UK, in terms of what's going on there. But Russia, that was on the radar screen at the beginning of the year, and that's kind of proved itself, and that's why I've kind of legged into that move. And let's just pull up Russia again to show you that kind of move, where it's different kind of pattern than you see. I mean, if you want to kind of try and catch some falling knives, the UK, Malaysia, Spain might be interesting, but I like to wait a little bit more time until things have started to develop and actually show some strength here, and that's why Russia right now is showing it's proved itself from $13-14. We got up to 18, all that strength, and it's kind of ready to make a little push above that resistance kind of going on there. Now, the reason why I've legged in to this with a half position is because I don't know, we could have a little bit of a sell-off at some point in the equity market. I don't think it's going to be anything kind of big. I think the Fed would kind of step in, particularly because we're in the window before the election, and so the Fed isn't going to allow anything dramatic to happen in terms of the equity market kind of pre-election, because that would help Trump and hinder Hillary, and I don't think that's kind of the way the powers that be kind of want things to go. So I don't think there's a risk of a big sell-off in the market, but we could have some trouble, because we're at record highs, and have a little bit of a jump down. If we have anything like that, that would be a good kind of buying opportunity into RSX, as a second leg in. So kind of see how this develops. It's early days for this, but I'll be keeping an eye on this, and for me this is a long-term hold. Anyway, so there we go. That is the ETF strategy if you're kind of interested in kind of longer term stuff. Starting with the iShares website to find those beaten down international stock market indices, checking them out on the ETF DB site to make sure you're trading the highest volume ones of those. Then kind of check out your currencies to see what the currency is doing. I'm using Google Finance to do that. And lastly, using your charting of the raw ETF to kind of check out if we've got a change in trend happening and it's time to kind of buy into an international market. So there we go. There's a kind of a new novel idea from Emini-Watch, using the better indicators to find some international kind of stock index opportunities to get into. Hope your trading is going well.